Singapore, as a country of free trade and commerce, is famous for its simplified tax laws, limited tax types, and low tax system. There is no tax system for overseas assets, making it one of the countries with the most relaxed tax environment recognized by the world. Among them, the corporate income tax, CIT, is only 17%, which is the lowest level among ASEAN member countries. More importantly, its single tax system and uniform tax rate reduce the regulatory costs for enterprises to comply with and realize the treatment of capital gains tax exemption, so that all shareholders can be exempted from dividend income tax. This series of preferential policies has undoubtedly provided a strong impetus for Singapore's economic growth, making it the first choice for domestic and foreign entrepreneurs and investors. Singapore company audit and tax reporting methods. Depending on the nature and business status of the company, we divide Singapore company tax reporting into 3 situations. 1. Zero tax reporting, suitable for companies with no business operations. 2. Direct tax reporting after accounting, suitable for small Singapore companies with operations. 3. Tax reporting only after accounting and auditing, suitable for non-small Singapore companies with business operations. Singapore company audit and tax return information. 1. Bank monthly statement and receipt. 2. Sales bills, invoices, contracts. 3. Cost bills, invoices, contracts. 4. Expense bills, wages, rent, must provide a lease contract or agreement, freight, etc. 5. Other relevant documents. 2 original articles of association, annual declaration form, business certificate, 1 copy each of the first secretary and director notice D1 form, copies of all company change information, if any, fixed asset bills, investment-related documents, the first 3 to 5 purchase and sales invoices and corresponding receipts and payment documents in the next year of accounting, etc. Singapore company tax filing accounting year and tax filing time. 1. Accounting year. Singapore company tax filing accounting year is generally 12 months, and the first year of accounting can be extended to 18 months. Singapore has tax incentives for newly established companies in the first 3 years. It is recommended to use 12 months as the accounting year. Company tax filing is before November 30th every year. 2. ECI estimated tax. The company must file a tax return 3 months after the financial year end. After filing, the Singapore Government Tax Authority IRAS will issue a tax payment notice based on the tax assessment form. Usually, you will receive a tax payment notice 1 to 2 months after the tax assessment deadline and pay the relevant taxes within 1 month after receiving the notice. 3. Form C tax form. The deadline is December 31st of each year. If the company's financial year-end is on or before December 31st of the current year, the assessment year, 𝗬𝗂𝗍, is the next year. For example, if the accounting period is 2010.41-2011.3.31 and the 𝗬𝗂𝗍 is 2012, Form C for 𝗬𝗂𝗍 2012 will be issued around April of each year to declare the tax of the previous year. If there is a discrepancy with the amount declared by ECI, the excess amount can be refunded, and the shortfall can be supplemented. The deadline for declaration is November 30th, 2012. The Tax Bureau will issue a tax payment notice after receiving Form C, and the tax must be paid within 1 month. Singapore company tax filing tax types. 1. Singapore company profit tax rate. The current corporate tax rate for Singapore companies is 17%. Newly established Singapore companies can enjoy the government tax exemption plan for the first 3 years. The exemption rates are as follows. To enjoy the above tax exemption plan, the company must meet all the following conditions. 1. The company is established in Singapore. 2. The company's business control and management must be in Singapore. 3. The company has no more than 20 shareholders. 4. At least one individual shareholder holds no less than 10% of the shares. Singapore companies can still enjoy some tax exemption plans after 3 years of establishment. The exemption rates are as follows. 2. Singapore Company GST. GST is a tax imposed on goods sold in Singapore or services provided in Singapore. The GST rate is currently 7%. If the company's annual turnover is expected to exceed 1 million Singapore dollars, the company must register as a company that collects GST. In addition, the company can also voluntarily register as a company that collects GST. 3. Other tax rates. The above is an introduction to Singapore company taxation. 𝗬𝗎 can help you simplify the tax process. You can leave us a message directly below the video. If you like our video, we hope you will like, subscribe, and comment.